FICO credit scores fell for the first time in a decade. Experian and Equifax have both reported an in debt in 2024 over 2023, and banks are tightening their credit lending books depending on your credit score. So this is probably quite a good time to look into your credit score, and hopefully at the end of this you will understand what you can do personally to improve your credit score beyond wherever it stands, whether it is at a 500 or at a 690. So let's get started. What is a credit score? Simply speaking, this is how likely you are to pay back the money that you have borrowed. You see, banks, unlike your friends, don't know whether you pay back the money that you have borrowed or not. So they have to actually look into your credit score, which is managed by credit agencies. There are a few: FICO and Vantage in the US and Experian and Equifax in the UK being the top ones. And understanding credit and credit scores are a cornerstone of not only your personal finance. Credit is the cornerstone of this entire financial services industry that I have happened to be a part of over the last 12-13 years. And my first few projects were actually in determining credit, understanding how credit scores are helpful for banks, how credit distressed customers can be brought onto the books or profitably let go of the books. So I know a thing or two about credit. Now let's talk about the scale of the credit scores. Typically, the credit score scale runs from 300 on the lowest end and 850 on the highest end. So if you are at a 850, you are doing really well, as opposed to if you have a credit score of 300, you need some attention. But what does a good credit score look like? Of course, everyone has a different opinion, but I like to stick to what FICO or Experian or Equifax or Vantage say. And they say that if you have a credit score of over 720, you are doing great. However, if your credit score is below 620, you are likely not going to get a great deal in the market when it comes to borrowing money. And for the biggest purchases in your life, for example, a car or a house, credit scores are critically important because a good credit score ensures that you get a much lower interest, which means that you end up paying a lot lesser money than someone who has a poor credit score and therefore gets charged a much higher interest, and then the same thing costs them a lot more. But what are the factors that affect your credit score? First up is your payment history. This accounts for 35% of your credit score. If and when you want to borrow money to buy a car, to buy a house, to get a personal loan out, whatever it is, if you have a longer history of payment and the fact that you are paying off your loan regularly, you are more likely to have a good credit score. The second factor that influences your credit score by about 30%, so very important, is your credit utilization. Simply speaking, credit utilization is the percentage of your credit line that you use every month or every year. Say, for example, on your credit card, the limit is $10,000. You have another credit card that has a limit of $5,000, and you have yet another credit card that also limits to $5,000. So your total credit line is $20,000, including these three cards. But every month you spend only about $2,000 on your credit card. This means that 2,000 divided by 20,000 is 10%. So your credit utilization is 10%. And credit agencies like to see a score of less than 30% credit utilization. So this is quite a key number. And one of the ways that I personally use to improve my credit utilization score is by calling up my credit card provider every year and ask them for an extension in credit line. This does not mean that I will use the extended credit. Even if the lender chooses to lend a line of $5,000 more per month to me, it does not mean that I will spend $5,000 more. In fact, I would personally not even spend 1 penny more, but it is essentially inflating the denominator of that equation so that your percentage of credit utilization becomes lower and lower and lower. The third factor that impacts your credit score by about 15% is your credit history. This means whether you have paid your loans off on time or not, how long you have been with a typical credit provider. So the longer time you spend with a particular credit provider paying off the loan every month, the better you'll do. The next factor affecting your credit score is the credit mix, and you can attribute about 10% of the credit score to this. Credit mix simply means the different sorts of credit lines you have. So if you have credit card, a car loan, a mortgage, a personal loan, and there's a variety of credit lines on your name, the better it is for your credit score. Because credit agencies then understand that you understand all sorts of financial loan instruments and act on them equally well. And the last factor that impacts your credit score in about, again, 10% of the weightage is a new credit line. So if you keep taking out new credit lines every month or every couple of months, this shows to the credit agencies that you are in need of credit. The lesser you need credit, the better financial stability and the greater fiscal responsibility you have. And actually, taking out new credit lines every couple of months impacts your credit score negatively. And I'm talking about all of the shopping credit cards or airlines and hotels credit cards and so on. The lesser of those cards that you have, the better it is for your credit. Next up, let's look at the tips that you can use to improve your credit score. The first thing is stick to a budget and stay within your means. Pay off your credit card loan every single month. Do not pay the minimum amount, pay the entire money and next month refresh. Some people look at using your credit card as your debit card. You use your credit card, but you pay it off in full at the end of every month. However, if you have problems with actually paying off your credit card debt, you might not want a credit card. But hopefully, if you are getting a credit card, you are more fiscally responsible than that. And it is just that you forget to pay off every month. And if you are in this bucket, the next thing that you can do is to automate your payments. So set up your direct debits, set up a system that will pay off your credit card debt every month on repeat from your current account as soon as your income hits your account. Just set this up once and you don't have to worry about paying your credit card bill on time ever again. The next thing you can do is to lower your credit utilization limit. Just because your credit card provider has decided that they can lend $10,000 to you does not mean that you have to go out and use the £8,000 of your credit line. Stick to your £2,000 of expenses that you need to. And every year, like I said, give them a call and ask for an extension in credit lines, because that would mean that you are increasing the denominator and keeping the numerator constant, which means that your credit utilization will go down over time. The next thing, keep your well-managed accounts, because remember I said credit history is quite important. And if you have well-managed accounts, you've been with a particular credit card provider for a very long time, and you have shown that you can pay off your debt every month regularly for 5 years, 10 years, 20 years, that has a tremendous impact on your credit score. So keep these well-managed accounts running, because they are like the elders of your credit history. The next thing is to not change up your credit lines very often. So don't start taking out new credit cards just because you can, because new credit cards imply that you are in need of credit and you are not being able to get the credit from other places. It also leaves a footprint on your credit history, which can likely impact your credit score negatively. The next one is an interesting one. Register to vote. Even if you are not considering voting, register to vote for your credit history. Though you probably should be considering voting because it's your legal right and duty, but I'm not going to talk about that. But your name and address on the electoral register helps credit agencies validate who you are indeed and where you live. So this is actually one of the things that experience says outright, that registering to vote has a positive correlation with credit scores. The next thing you want to do from time to time is check the accuracy of these credit reports that you are getting. In fact, you can get them for free from most of the credit agencies, And if anything looks suspicious, please reach out to them, because this will have an impact on your credit score. Because this could mean that you have been subject to identity theft and so on. So check your credit report every so often to make sure that your personal finance is indeed your personal finance and not someone else's. And finally, this is a little bit of a boost if you are in the UK. You can add regular payments into your Experian Boost through open banking. So if you add your current account to Experian, they can have a look at your monthly incomings and outgoings and give you points for actually paying off your mortgage, your other bills like rent and whatnot, and also take into account how much you are saving every month. So this is possible because of open banking. However, I am a bit of a privacy nerd, but I will leave it out there in case you want to try. Okay, so we have talked about what is a credit score, what does a good credit score look like, the factors that influence a credit score, and how you can improve your credit score. If you have enjoyed this episode so far, please do consider subscribing, because it does help out the channel a lot. Thank you very much for your support. Next up, I am going to talk about what should not impact your credit score. And if you find that any of this has impacted your credit score, please raise alarm bells immediately, because you might be subject to some sort of weird financial discrimination. The first thing that should not impact your credit score is your income, because income should not have any bearings on credit scores. However, if you are trying to get a mortgage or a car loan, banks might want proof of your income to decide whether you will be able to service that loan or not. It has nothing to do with your credit score, but borrowers might want to take into account, which is why I always say improving your income is one of the best financial decisions that you will make, and one of the easiest without having to toil harder than you already do. I talk a lot more about this in the Six Figure Club. I'll leave a link down in the description below. So if you want to come join us, please by all means do. The next thing that should not have any bearing on your credit score is your address. Of course, if you are living with a partner and you have a joint mortgage, their credit score and your credit score might be tied up, but your address should not have any bearing on your credit score. It is only you who has a credit score, not an address. The next thing that has no bearing on your credit score is your relationship status. So challenge it in case you find something dubious in there. Another thing that should not impact your credit score is your employment status. Whether you are employed, you are unemployed, you're self-employed, should not matter. However, I have found that borrowers sometimes are a bit doubtful when lending to self-employed people or unemployed people, because they are unsure about the variance of income that comes in. When they actually ask for proof of income, this is something that comes up, and this is something that borrowers might want to consider, but not the likes of Experian or FICO. The next thing that should not impact your credit score is your race or ethnicity. If you find that your race or ethnicity has a bearing on your credit score, raise alarm bells, because this is discriminatory, as is religious affiliations. So your credit score should not be tied up to your religion or the lack of it. Finally, even though gambling is frowned upon, and I personally would caution you from it, your credit score should not be tied up to gambling. Of course, gamblers are the target for a lot of subprime debts and credit line extensions from gambling agencies. And I would encourage you to please stay away from gambling where possible, because sometimes a recreational gambling hobby can turn into serious financial debt, which could cost you your peace, your family, your career, your financial life, and frankly, a lot more. So be responsible about it, and ideally stay away from it. That's all that you need to know about credit scores, how to manage your credit score, and how to improve it from 550 or 690 to that 720, 780, 850 even. So if you found this useful, please consider subscribing. If you found this useful, please consider sharing it out with your friends, because I am on this mission to actually help out people who need me the most. You can help me, help you, and others like you. If this was useful, please leave a comment down below on what is the action that you are taking to improve your credit score. And if you have enjoyed this, you might enjoy other videos on money, business, and careers that I'll leave up here or here. And I'll see you the next time. Bye.